exams. Oops, that's not chapter 6. I try to get it out tonight, but started by Friday, I'll be up, and it'll be due on 19. Sure. Yeah, so we do on Friday. So finish up chapters 6 tonight. All right, so what we're gonna do, let's take out the, or pull up the chapter 6 handout if you haven't already, and I will do the same. Oops, that's not it. Well, I gotta do something. I got a clock here that is. It's supposed to be a silent clock, but I don't know if you guys can hear it or not. It sounds like a sawmill or something. It's obviously not silent anymore, so I'm gonna take the battery out. And with the battery out of it, I won't know what time it is, so maybe we'll go on to 11 o'clock tonight. Get that extra amount of classes. Okay, let's go to problem 12. I didn't talk anything about this, did I? Maybe it's on page 11. Order of the multi-step income statement. I think it's on page. I think this is page 11. Okay. It's kind of like what we did before for the classified balance sheet, in that we put things that are similar together. That's where people will look for things. And it's the same idea for the multi-step income statement, that we will group things on the income statement together that go together. And that will give people more information basically on when managers are trying to make decisions and so forth, of the information that we give them, that it's in a format that is more usable. Okay, there are basically we remember the order by Scoot. There's really 5 categories. Scoot E if you count the income at the end, but Scoot is how we remember the order of it. And we start out with S for sales. And so our sales, just like before on the income statement, we start out with sales or revenues, same thing. Start out with the sales. Move to C, which is cost of goods sold, kind of like what we did in the handout. Get the gross profit. So this is all kind of exactly the same as we had in the handout so far. Now, here's where it gets a little bit different. Now, you'll notice that in the handout, we had the cost of goods sold. So that was only though for the things that were sold. So if you're, let's say you're running a shop. Where's my little car? Here's my toy car. Like my toy car that I sold. This would be the cost of goods sold. But notice that that cost of goods sold does not include the rent for the store, doesn't include paying the employees, doesn't include paying the utility bills and that kind of stuff. That's not included in the cost of goods sold. The cost of goods sold is what did this car, like this toy cost that I sold. But there are other things, other costs, and that's kind of what we're looking at here is the other costs that come into play. And we basically break them up into 2 different categories. And these are kind of like the important, and maybe that's the important thing, but an important element of this whole multi-step income statement. Operating expenses, these are things that are necessary for the business. So these things that are necessary for the business. And they usually come in two different flavors. They can come in more than that, but selling and administrative are the two usual general categories that we have for it. There could be hundreds of expenses in each of those, but we generally lump them into selling expenses and administrative expenses. And again, these are things that are necessary for the business. So for instance, the selling expense would be to have a store. If you have a store, you have to have people to stock the store, people that are the cashiers and all that kind of stuff. Those are selling expenses. They're related to actually selling whatever it is. Yeah, so if I have my little toy shop and I'm selling cars, I gotta have a shop for people to walk into and all that kind of stuff. That's all selling expenses. Administrative expenses are things like the accounting department, like upper management, finance people, those sort of people that aren't necessarily selling anything, but they're still necessary for the business. Now, down here, to kind of contrast this down here, other revenues and expenses, these are things that are not necessary. They're things that are termed as incidental to the business. So things that are incidental to the business, they're not necessary for the business, but because you're running the business, these are things that do happen. For example, if you're running let's say you're running a pizza restaurant, you have a bank account, so you collect all people give you cash for the pizza, you put it in the take a deposit, put it in the bank, and you have a bank account. Now maybe that bank account earns interest. Now you're not really in the business of earning interest. You're making pizzas. So it isn't that it's that's part of your business is earning interest income, but because you have a bank account, because they pay interest on the bank account, you're earning interest. It does happen. So these are things that are not necessarily what you're in business for, but they do happen. Another thing would be you have a delivery truck and you buy a new one, so you sell the old one. You're not in the business of selling trucks, but you buy a new truck, you sell the old one. I mean, that's just part of the business. So it's incidental to the business, not really what you're in business for. And the last of the scoot are taxes, and that's basically all I can say about that. You have to pay them and whatever. So anyway, so again, these first two we kind of already looked at, the sales and the cost of goods sold, getting us the gross profit or gross margin. We've already looked at those, but these are kind of the additional expenses, and again, these are kind of categorized by importance. Okay, well, let's go ahead and do one of these together. I got to do something. I hope your formatting isn't messed up like mine is. If it is, I apologize. As a matter of fact, I'm going to mess it up again. I think I'm going to make this bigger so we can see it better. Okay. So on page 12, on the following page, there is a space for, let's put these in. And we're gonna just go ahead and do what we do this basically, put it in down here. Okay, so we start out with our S, which is our sales. Oops, not SS, S. And what do we have for sales?
1,200. Oh, sales is 2,600.
Yep. $2,600, and then let me make that bigger. That's gonna hold it. Okay, so sales revenue. Now, we didn't get to keep all those sales though. It's not gonna work out. Because this. Some stuff got sent back to us. So either sales returns or discounts. You know, someone ordered a blue chair and you sent them a red one. You say, okay, well, if you just keep it all, you know, we'll send you $10, give you $10 credit if you keep it, that sort of thing. So this is going to be sales returns and discounts are going to be subtracted from and what we're going to end up with is our net sales.
1,900.
I think you subtracted too much. Wait, 2530 maybe?
2510, yeah.
Okay, so this will be our sales. So that's what, really what our sales are. So, we sold 2,600, but 70 got sent back, or we gave money back of whatever, 70. And so now our net sales are just the 3530. So that is our S. I don't know. Okay. So our sales. Next thing for our scoot is C.
Cost of goods sold.
For the 1,200.
Okay. So cost of goods sold. It's 1,200, and those are the costs. So there are things that are leaving the place,
Uh-huh.
and that will give us our gross profit. Okay. $1,330. Okay, so that's what we made on just the goods. We sold them for 22,530. We paid 1,200 for them, and we made on just selling the goods 13,330. And now, though, we have to pay the rent and all that other stuff. Okay, so we go to our first O is our operating expenses. And the two you find most commonly are selling, which would be like the store. If you have a store, that'd be selling, it could be salespeople, it could be any number of things, but some kind of selling expenses, and then usually general and administrative expenses. Okay, so. You could total them up. I think I'm just gonna put them each separately. It's possibly you could total them up and then do total operating expenses and blah, 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 but you can also just subtract them all. So what is it, 250? General administrative expenses. Oops. Minus 100. And this will give us our operating income. Now be careful here though, because after we account for the cost of the goods that we sold, we're at 1330. So it's gonna be 1330 minus a little bit bigger. Doesn't even look like an arrow anymore. Okay, so 1330 minus those two, whatever that comes out to.
That's to 980.
980.
980, yeah.
And so this is the operating income. And I can tell you that a lot of times finance people, this operating income is the more important than maybe even the net income. You say, well, why? Well, it's because this is what they made on their business, whatever it is, whatever their business is. So, if this is Ford, okay, this is what they made on their cars. And I know they may have made other, doing other things, but on just their core business, what did they make? And so, this is a lot of times this operating income is a very important number for those people. Okay, second O. Other revenues and expenses. And these are things that are incidental to the business. And usually they come in 3 flavors, 4 flavors. Anything that has to do with interest and gains and losses. So interest and gains and losses. Okay, so let's go to
Loss of assets.
yeah, loss on assets. Now, some of these can be positive, some can be negative. Loss on sale of assets, is that going to be positive or negative?
Negative, they lost.
Yep. I'm just going to put them right over here. Plus minus 10. Okay, and interest expense and interest income, we'll see what both go on there. Interest expense. They're gonna be a positive or a negative?
Expense.
If it's interest,
Expense.
if it's interest, should it be positive? I don't
No,
know.
it's an expense, so it should be
Expense,
negative.
expense,
Because
right.
it's going out.
Yeah, now,
Yeah.
but now this next, well, this next one will be.
Income would be positive.
Yeah, so interest income,
Expense.
I think
oh,
the
no.
terminology is interest revenue, but anyway, it's the same thing. Interest income, yeah, this will be positive. And so here's the thing with these other revenues and expenses, they can be pluses or minuses. Okay, and this will give us our income before taxes. Before income taxes. All right, so whatever that, so it's 980. Format, better. Yeah, purple. Here we go. That I can see. Okay, copy. $980 minus 10. I just realized this is
It's
It's gonna be
zero,
same
yeah.
number, 980.
It's the same number, yeah.
what idiot made this thing? All right.
Yeah.
Yeah, okay, so this will be. I'm sorry about that, guys. That's not very interesting. Okay, and lastly, we have T, which is for our income tax expense or just tax expense. $35. What I did on this thing, they usually don't make the numbers the same. There's two of them that are the same number. I must have done something goofy. I'm not sure what I did. Okay, and what we'll be left with is our net income. $980. Oh.
$945.
945 again.
So there's our net income. And again, a lot of times, again, this operating income is one of those numbers. A lot of times that they'll actually look at a little more closely than some of this other stuff. A lot of this other stuff, if you recall, is incidental to the business. They don't, they don't really have too much control over it. And it's not really what they're in business for. And same thing with income tax. I mean, they do companies will do tax planning, but in the end, they really can't. You can't change too much what your income tax is. At least not legally, anyways. So, a lot of this stuff is kind of out of the control of the company, whereas this stuff up here is considered in their control. Multi-step income statement, and again, we kind of, for the same reason we do it in the classified balance sheet, same thing. We try to put those things that are similar, in this case, similar, we look at importance, we put those things together, and that will help people make some decisions on it. For instance, those things that are in operating expenses are probably more important than other revenues and expenses. Okay, let's do another one. do 14, and hopefully 14 is. I think 14 is a little bit better. Let's hope it is.
$1,500.
By the way, sometimes when you look at someone's company's financial statements, they'll just have net sales or net revenues. They'll have notes that'll tell you what they've taken out, but sometimes they'll just give you that one number.
Oh, okay.
They'll just give you this number.
$580.
Okay. Thank you. Ah, jumped ahead here.
Expenses.
Yeah. Okay, now remember, cheat above here. Oops, what am I doing? 320, I think.
320, yeah.
Yeah.
Yeah, that's usually a fairly important number for most companies. Okay, gain on sale of equipment,
Mhm.
plus or minus?
Gain is a
Gain
plus.
Yep. Expenses are negative. All right, and $365.
Yep, 365.
I got it. Okay, so this will be our income before taxes. Which
The T.
means the next one must be taxes, right? That's
Yeah.
income before taxes.
$65. And net income.
200.
$300. Okay. Simple to the point.
So that's that.
Mhm.
Okay. Next thing I'm going to do is I'm going to send out the chapter 1. Actually, I want to go over one more thing before we do that. I think it's on a diagram. This thing. I don't know if it's more confusing or not, but I was trying to, different people learn different ways. Some people are visual, some people learn by, the steps, going through the steps and all that kind of stuff. But there's kind of a visual of it, and that we have all this inventory that we buy. It's all the available units, and we either sold it or we didn't. So this total units available is just, we either sold it or we didn't sell it. Now, if we sold it, that goes into cost of goods sold. So whatever units we sold, whatever the cost of those units were, that goes into cost of goods sold. Units that were not sold are in the inventory. So, it really is just kind of splitting up. They'll call it allocating. How much is allocated to cost of goods sold? How much is allocated in the inventory? But it's based on what the assumption is about which units were sold. So the first ones in were first ones sold. And the costs with those will be whatever those costs were will go into the cost on the financial statements. And here, LIFO is really the same thing, except that instead of taking the first ones, you take the last ones. The last ones are the ones that you sold. thing or not, but anyway, let me 1 second. Stop sharing. Be stingy for a minute here. I'm going to send out the Chapter 6 practice today, part 1. And we make sure it's up in Word, Blackboard here.
What are we doing? I had to step out. You looking for something?
Me?
Yeah, what are we doing?
Yeah, there was this confused look on my face.
No, I had stepped out, so I'm like, what's going on?
Oh, I sent out the chapter.
Yeah, I have it. I have what you sent out in the email.
Yeah, well, there's another email coming.
Oh, another one coming. Oh, okay.
Yeah, practice exam part 1. And right now I'm trying to make it available in Blackboard. Hopefully it went through. Blackboard is just to let you guys know, Blackboard's been extremely slow this week. And you're like crazy amount. So just I was putting in not in this class, but another class. I was putting in some handout stuff, and it was really taking like a minute before it would go, which is maybe not that big of a deal, but a minute really seems like a long time. Okay, I think you guys should have got the part 1 in your email. I'm sure both of them coming through. So, and by the way, I think I told you guys this last class, but
Wait, sorry, Professor. Sorry, really quick. So what we're doing now, you just emailed it to us now?
yeah.
So it's not chapter 6, inventory and cost of goods sold. No, we're not doing that.
We just finished that one. Yeah. So not that. Yeah, so we just finished these 2. No, we not that. I'm sorry. We just finished this.
Oh, okay, yeah.
So we're
Okay,
finished this. So
sorry.
now we're going to move on to these 2 down here. Yeah, so this is finished, and I'll put a submit thing for this in Blackboard.
Okay, sorry, I got them confused.
No.
Okay.
Yeah, I gotta look at something here real quick though. Make sure. Oh, I think I told you guys before though. There's a tab in your in Blackboard. Like wander here that you can have that has not only your email link. You can get your email here, but you can also do Microsoft Word and Excel and PowerPoint. You can access it from your from
Okay,
So if you want to access it, I should put this on first instead of the announcements. Announcements just a link. But anyway, or put this in announcements. That's my idea. So anyway, so if you need to get any of those, and everyone has it, it's included with your tuition. So it's there for you. All right, so let me get rid of this. So this is what we should have for. So there are, I think there's 7 multiple choice questions. The first 4 are the tough ones. Those are LIFO, FIFO. 5, 6, and 7 are more theoretical kind of ones, but they're less calculating, obviously. So I think what I'm gonna do, I'll start the poll. So there's only gonna be 7 answers, there's only 7 multiple choice questions. So for numbers 8, 9, and 10, you can put anything in those in the poll. You have to the polls make you answer all of them. So 8, 9, and 10 just it doesn't really matter what you put in, just anything, just to submit it. But anyway, so we'll do the extra credit points based on numbers 1 through 7. And I just want to let me go through one more thing and then I'll shut up. Let's take this first one. It says that reveals that there are 32 units on hand. So they did an inventory and there's still 32 units. Okay, so 32 units, were those units sold or are those in ending inventory?
Those in the inventory.
Inventory.
Yeah, so the ones that are on hand, this will be sort of like the units that are ending inventory.
So they still have 32 more left.
So 32 of them were, not sold. So how many units were sold?
68.
That's a question I don't know the answer. Yeah, 68. Okay, so of the 100 that were available, I don't know how to do this, but of the 100 that were available, they were either sold or they weren't sold. So 68. All right, so we come in here for a cost of goods sold. You're going to use this. It's more confusing. So units sold were 68. So you sold 68 units, and the question is, using FIFO, first in, first out. Here's your data. What would be the cost of goods sold for this one? Using FIFO. Exactly the same data down here, but for the ending inventory. So 1 and 2 go together. They're both FIFO. One's cost of goods sold, one's ending inventory. 3 and 4 are messed up because I was goofing around up here. Exactly the same thing, except that now it's LIFO, cost of goods sold, Ending inventory. And 1, 2, 3, and 4 all have the same data. Notice that it's all the same. So in other words, the unit sold is going to be the same for every single one. Okay. For those of you that are on the part 2, if you're already gone through it, what you should have got for the. I'll clean this up a little bit. Did you guys actually enter the multiple choice into the poll? Okay. All right, I'm gonna go ahead and end the poll then. I don't know what to do here. Okay. So let's go to. Okay, for the first one, you should have gotten this 1340 and let's get tie here. Oh, so I think somebody put in the ending. But this is so it's A. I'll give you that one. So that one's A, so that's good. What was left over? We still had. We sold 48 out of the 70, so we had 22. So of the purchase, we had 22. Let's see, this would be. Hey, that's funny. The inventory would be units that look like this. Oh, 660. How come nobody picked that one? Wait a minute, wait. No, number 2 is right. Number 2 is right. C. Yeah, yay. 3 is C. Looks like you guys all got that one. So I guess we. Okay, so C is 1380. Again, start with the first in. No. Wrong one. I'm sorry. Test it. And is it fine with that one? This one. C. You guys did fine with that one too. Okay. For 5. A is correct. Uh, 6. C. You guys are doing fantastic. Uh-oh, what happened on 7? Oh, well, it's a tie. I'll give it to you guys. B. FIFO has the highest ending inventory because FIFO said the first ones in, which are usually the cheapest ones, were sold. So the more expensive ones are still sitting on the shelf. So they have the highest ending inventory. Good. Make a note. Wait, I don't need to make a note. I just gotta save this thing. Yeah, stop sharing. Okay. Okay, I'll deal with this later. All right, so let's go on to part 2. Oops. Nope, that's not part 2. That's not part 2. This is part 2. Okay, so part 2, I want to show you something though that's about this one. So you sold 230, and if you go through the steps, you know, this being the first in, take the first 90, blah, blah, blah. You guys get it, I think, so far. So here's the thing. So this 7,900, this total available, truthfully, if you get the cost of goods sold, if this was the cost of those units that we sold, then you can actually, you know, get the ending inventory without really doing very much calculations. And here's why. If we had sold 6,300 of these, so of these costs, 6,300 was sold. The rest of it must be an ending inventory. So you can just subtract out, you know, if 7,900 was the total that we had, if you sold 6,300 of them, the rest of it, whatever is left over, 1,600 must be in the ending inventory. Now, there's nothing wrong with calculating it out, and that's what I did down here. But truthfully, if you just get one of them, you can go to this total for the available, and you can figure it out without, you know, going through the steps. Or maybe a better way to put it, you could check your answer without, you know. Okay, so that is that's the FIFO. 6,300 for the cost of goods sold. And the first in, first out, that has to do with the cost of goods sold, not the ending inventory. The cost of goods sold is the first in, first out. So these are the first ones in. Those are the first ones sold. And this one is way most, you know, virtually all business works. The first one in and the first one sold. And you know, sometimes it'd be impossible to have it. Well, for here. If you made a sale on January 15th, there's no way it could have been for ones that you purchased on January 21st. Right? I mean, they weren't even there. So, you know, first in, first out is the logical one, the one that's most the best matches the way things really flow in business. Okay. We didn't highlight these like I should have. Okay. So coming down here, the last one's in where the first one sold. So the same 230. You can find the cost for them. Go to the last ones in. So the 21st were sold first, the 10th were sold second, and going back to the January ones were the last 50 we picked up. What's wrong here? Oh, I don't have a total amount for those. A total amount. Okay, and so so what we ended up with is 40 at 20 for the ending balance. That's this down here. Ooh, don't do that. And you'll notice if you add those two up, the 7,100 plus the 800, that's the 7,900. That's the same as, this up here. And I'll put it here. Wait a second, I think this thing up. I got the wrong thing. So 7,900, if you sold 7,100, that means the other 800 was not sold. Same thing down here. Question on that thing? You guys are sleeping, aren't you? You guys are sleeping, I can tell. All right, well, so here's what I'm gonna do.
Oh,
So I'm gonna send out the exam. I'll send it out by tomorrow. I'm hopefully gonna get it done tonight. I gotta make 8 forms of it. So but I should have it sent out tonight. I'll try. I'll put it this way. I'll try to get it sent out tonight. And I think I put 2 multiple choice questions on, so just 2 of them, and then LIFO, FIFO problem, FIFO or whatever, FIFO, LIFO, I guess. From so any questions on any of this? All right.
No,
Okay. Yeah. So I mean, yeah, cost of goods sold is not so much that it's not difficult to imagine, but it's just tedious. Keeping track of all the layers and all that. Okay. Well, I will see you guys in a week's time. We'll start a